Two major pharmaceutical companies, both Dow components, posted quarterly profits that beat analyst predictions. But both stocks went in opposite directions as the companies look to find new areas of growth. Meg Terrell has more.
The country's two largest drug makers are gearing up for growth. Both are facing generic competition to major medicines. Merck lost patent exclusivity on prescription nasal spray Nasonex, while Pfizer faces generic competition to Celebrex for arthritis and pain later this year. The two drugs' combined sales, more than $4 billion in 2013.
Both companies are facing a lot of patent losses, and they have a lot of legacy products that are doing pretty well to kind of offset those patent losses, but really translating into pretty stagnant growth. And that really sums up to leading to the question, well, where is growth going to in the future? And I think that's really dependent on the pipeline for both of these companies.
So what's coming up? For Merck, investor attention is on cancer and hepatitis C. It's developing a drug called pembrolizumab that's under consideration at the FDA for treatment of advanced melanoma. But Morningstar's Damian Conover says it could be expanded into other diseases like lung cancer, in a market he estimates to be worth $20 billion by 2023. Merck's also developing a combination of medicines for hepatitis C to shorten treatment times to as little as 4 weeks. That's the same disease targeted by Gilead's Sovaldi, the pill that's drawn attention for its efficacy and controversial price tag. Conover says drug makers' focus on these specialty diseases is only increasing, and that could be good for patients.
As Merck shifts to specialty care, and as do a lot of other big pharmaceutical firms, you're going to see a bigger wave of an influx of specialty care drugs that's going to increase pressure on pharmaceutical firms and biotechnology firms to reduce some of those prices.
As for Pfizer, it's developing a breast cancer drug called palbociclib that could draw $5 billion in peak sales, according to ISI Group. And all eyes will be on Pfizer's plans for business development. Conover expects it will make another bid for UK drug maker AstraZeneca, continuing a string of so-called inversion deals that lower companies' corporate tax rates by moving them overseas.
And in telephone interviews today, the CEOs of both Merck and Pfizer said that U.S. tax code must be reformed. Merck's Ken Frazier said the company's not considering a big consolidation deal, while Pfizer's Ian Reed said the company will consider acquisitions of all sizes. Both CEOs said that U.S. tax code puts companies at a competitive disadvantage. For Nightly Business Report, I'm Meg Terrell.